Throughout history, there have been countless scams and financial frauds that have shaken the world. But some have had a greater impact than others. These are the stories of the top 5 biggest scams that shook the world. Charles Ponzi.
Because he always got caught. And as a matter of fact, after a time, his family, tired of endlessly bailing him out, decided they'd had enough of him. And very frankly, they just simply deported him.
In the early 20th century, a man named Charles Ponzi promised investors high returns on their investments, but his scheme was too good to be true. This is the story of the Ponzi scheme, and how it duped investors out of millions of dollars. Charles Ponzi, an Italian immigrant, arrived in America in the early 1900s with big dreams and little money. He quickly realized that the key to success in America was to invest in the stock market. Ponzi began offering investors high returns on their investments, claiming that he was buying and selling international postal coupons. He promised returns of up to 50% in just 45 days. Investors, eager for a quick and easy way to make money, flocked to Ponzi's scheme. He took in millions of dollars from investors, but instead of investing the money, he used it to pay off earlier investors, creating the illusion of profits. But Ponzi's scheme couldn't last forever. The media began to investigate, and the truth about his scheme was exposed. He was arrested and charged with mail fraud. Ponzi's scheme was one of the most famous and devastating financial frauds in history. It serves as a reminder of the dangers of chasing after quick and easy money, and the importance of due diligence when investing. And to this day, the term Ponzi scheme is still used to describe any fraudulent investment operation that pays returns to its investors from funds contributed by newer investors, rather than from profit earned. Harshad Mehta.
I just don't feel only. I have tried to even bring out in a very detailed manner, expressing how I am being victimized, how things are being discriminated against me. Like with other players, only first of all, the big gap is that this whole scam, or whatever you call irregularities, has been not committed by any one person or any one group of persons. It is the whole business. Lately it came out that yes, it has been the system of the market, and 80% of the trading volume has been going beyond RBI regulations. And to the surprise, even now the confession is there from the RBI. But they were aware of it since last more than a year. So if they couldn't change it, banks, who were the deciding authority, who were the one who had the more of a say in the market, brokers are the small segment of the whole market.
In the early 1990s, India was introduced to the world of stock market, and a man named Harshad Mehta took advantage of the lack of regulations and orchestrated one of the biggest financial scams in the country's history. This is the story of the Harshad Mehta scam, and how it shook the foundations of the Indian stock market. Harshad Mehta, a Gujarati stockbroker, began his career in the stock market in the late 1970s. He quickly rose to fame, becoming one of the most prominent and influential brokers in the country. Mehta and his team used illegal and unethical means to manipulate the stock market and artificially inflate share prices. They used a technique called ready forward transactions, which involved borrowing money using fake bank receipts, and using the money to buy shares, driving up their prices. Mehta's actions led to a stock market boom, and many investors, including small investors, jumped in to make a quick profit. But Mehta's scheme couldn't last forever. Eventually, the Reserve Bank of India, RBI, discovered the fraud, and the market crashed. Mehta was arrested and charged with several financial crimes, including securities fraud and money laundering. He was found guilty on several counts, and was sentenced to prison. The scam caused widespread panic, and resulted in a loss of billions of dollars for investors. The Harshad Mehta scam is a reminder of the dangers of greed and the importance of ethics and transparency in the financial world. ZZZZ Cleaners.
At age 16, I started a Z-Best carpet and furniture cleaning company, and by the time I was 20, it was worth well over $240 million in a hot stock on Wall Street. There was only one problem with the company and me. We were both frauds.
In the early 2000s, a company called ZZZZ Cleaners promised to revolutionize the dry cleaning industry, but it was all a scam. This is the story of the ZZZZ Cleaners scam, and how it defrauded investors out of millions of dollars. ZZZZ Cleaners, a dry cleaning franchise, was founded by a man named John Zaccarini. He claimed to have developed a revolutionary, patent-pending dry cleaning process that would save money and be more environmentally friendly. Zaccarini convinced investors to invest in the company, promising high returns on their investments. He also convinced several reputable business leaders to serve on the company's board of directors. But the truth was, Zaccarini had no patent, no revolutionary process, and no real business plan. He used the money from investors to pay for his own personal expenses and to fund other fraudulent schemes. Eventually, the fraud was exposed and Zaccarini was arrested and charged with multiple counts of fraud. The Madoff Pyramid.
Told you we were chasing Bernie Madoff, and we still are this morning. Adam Shapiro, hopefully he's going to track him down one of these days. Investigators trying to track down everybody that's involved in this $50 billion Ponzi scheme or alleged scheme.
In 2008, it was revealed that Bernie Madoff, a well-respected financier, had been running a Ponzi scheme for decades. This is the story of the Madoff pyramid scam, and how it defrauded thousands of investors out of billions of dollars. Bernie Madoff, the former chairman of the Nasdaq Stock Exchange, promised his investors consistent, high returns on their investments through his investment advisory business. He attracted a wide range of investors, from individuals to large institutions. But Madoff's investments were not real. He wasn't investing the money at all. Instead, he was using the money from new investors to pay off earlier investors, creating the illusion of profits. He was running a classic Ponzi scheme. The Madoff pyramid scam came to light in 2008, when Madoff's own sons reported him to the authorities. He was arrested and charged with several financial crimes, including securities fraud and money laundering. He was later sentenced to 150 years in prison. These days, the legacy of the Madoff pyramid scam lives on as a cautionary tale of the dangers of fraud and the importance of investing wisely. Barings Bank.
Eventually, the bank discovered that Leeson's dealings had cost them more than £800 million, almost the total assets of the bank. On the Singapore market, rumours spread of fraud, collusion and mismanagement. Leeson fled, but was finally extradited from Germany and put on trial, charged with forgery and fraud.
In the 1990s, the Barings Bank, one of the oldest and most respected banks in Britain, collapsed due to the actions of a single rogue trader. This is the story of the Barings Bank scam, and how it brought down one of the most established financial institutions in the world. Nick Leeson was a young and ambitious derivatives trader, who was placed in charge of Barings Bank's Singapore operations. He began to make unauthorized trades on the Singapore International Monetary Exchange, SIMEX, using the bank's money to speculate on the direction of the Japanese stock market. At first, Leeson's trades seemed to be making a profit for the bank. But as the Japanese stock market began to decline, Leeson's losses grew. He began to cover up his losses by creating false accounts, in order to hide the true extent of his losses from the bank's management. But eventually, Leeson's actions were uncovered, and the bank was found to have lost over $1.3 billion. The bank was forced to close its doors, and Leeson was arrested and charged with fraud. He was later sentenced to 6.5 years in prison. The legacy of the Barings Bank scam lives on as a cautionary tale of the dangers of greed and the importance of ethics in the financial world.